Welcome to Investors Insights. Our topic today is when the Fed talks. The reason we chose that topic is that we are watching closely what the Fed's doing during this time period. Also, I'm joined today by my distinguished colleagues, Bobby Norman, Trey Booth, and Adam Van Zandt. And we have just had a fantastic meeting in which we are looking into the rest of February and into March for the first quarter of 2021. I also need to tell you before we get into that discussion that President's Weekend is an important weekend here at Five Plan Partners because on February 18th, we will officially have been open for 16 years. And we want to thank each and every one of you that has believed in us through those 16 years. 2008 downturn, here we are in COVID. The list could go on and on with the volatility that's been in the market. We thank you for all your support and belief in us. In addition to that, the other day I had the opportunity to meet with a client that I've known for 37 years that has worked with me and also with our team here at Five Plan Partners. It's a huge honor, and we believe in long-term relationships. We also want to provide great service and advice like you're getting ready to experience here with the discussion we're going to have. But with that, I just want to point out that not only on Mondays do we do the portfolio strategy vlog, but we also are doing other vlogs. We have a vlog coming up about your tax information, how you can access it here at Five Plan Partners online to take advantage of technology. We also, on February 17th, are doing a business owners virtual Zoom meeting. We're doing it in conjunction with Main Street, Alabama. We've got a lot of people attending. We're very excited, and we will be talking about economics, the markets, the changes in business models, and all the stimulus that's out there for business owners. If you'd like to join us in that, please contact Felicia Ludlam at our office, and Felicia can send you an invitation and a link to join. With that said, let me bring on now my distinguished colleagues. And Bobby Norman, I am going to choose you first here. You fired up the discussion this morning with what you were bringing up and what we need to be looking at this week. In fact, you're the reason we chose the topic, when the Fed talks. So elaborate on that.
I want to focus on something that came from the Federal Reserve last week that could impact the market for a few months going forward. Last week, Fed Chairman Powell made a very important statement and reconfirmed that the Fed will not tighten policy until low-income workers recover. He also said that the Fed is committed to allowing a hot labor market run until it pulls in the low and moderate income workers that are still out of work because of the COVID pandemic. And so right now, we're a long way away from a hot labor market, still 10 million jobs short pre-COVID, which means the Fed will continue buying 120 billion bonds a month for an extended time. And so I want to focus on jobs for a second. We've seen a high wage jobs, those with annual incomes above 85,000 return to pre-COVID levels, but it's the low wage jobs, those whose income is below 30,000 are actually starting to see losses again. And this impacts you, the client, because more liquidity and low rates will continue to be a tailwind for a market that has run up the past few weeks. And so it's important to know when the Fed talks, the market listens. And that's why we follow and talk about the Federal Reserve and their actions as much as we do.
Well, and Bobby, those are all fantastic points. In fact, I'm reminiscing. I mean, throughout my entire career, two phrases we always heard and have always applied is, don't fight the Fed. And number two, the trend is your friend. And so you're bringing up great points here that, the information that we're looking at, the action of the Fed and how they make a difference. So as you brought that in, though, Trey, you jumped into the conversation to elaborate on some things regarding jobs and tying it in with the Fed.
Yeah, definitely. So over the last year, we've talked a lot about how wages have actually gone up while unemployment has spiked. And a lot of that is because of federal government stimulus. And what has also happened during that time period is savings have doubled. But what we're seeing right now is we're seeing a reintroduction of higher unemployment rate in a deteriorating labor market late in the cycle. Last week, 793,000 people applied for unemployment for the first time. That was higher than the 760,000 forecast. That leaves 4.54 million people on unemployment currently. The U.S. labor force participation rate is all the way down at 61.4%. That's really low. That is the percentage of people who are working that can work, and that's an extremely low number. So people are leaving the labor force, and there's the need for a lot of help, because this is happening at a time where we're seeing the cost of food, worldwide food inflation, hitting its highest level since 2014. And so what will happen likely is, as people are needing to spend more money, as we're seeing costs go up, we've been talking about energy costs going up, now food costs are going up, that higher savings rate is likely going to be spent down. And that money would come out of financial assets and could be negative on the markets. So the Fed continuing to support could fill that gap of savings going down as the consumers having to deal with higher prices, and is very important and supportive for the market. That $120 billion needs to fill the hole that possibly could be created by these consumers that are continuing to lose jobs at a time when prices are going up. So we have this give and take right now. And so the Fed is really the buyer of last resort, and that is an extremely important role in the current market environment.
No, those are all great points. And I think it's going to be a theme throughout 2021. Mm-hmm. And, I'll use as an example the virtual meeting we're having on February 17th. Normally, that would be at an event place. Mm-hmm. Normally, there would be food served, beverages served. There would be all this extra jobs and manpower needed to be able to host that kind of event. Instead, everybody's going to be sitting in their offices. We got the economics, we got the markets, and then we have business models changing. And those three forces are going to be pulling and tugging at each other throughout the remainder of this year. You gentlemen agree with me on that?
Yeah, definitely.
Yeah. And Adam, as we follow the markets here on your technical analysis, I've received great emails regarding the information that Trey, Bobby, and you are providing. But people really like how you've pinpointed certain indices in regards to the level they're at, where the resistance is, the support. So talk about that, as we go on into President's Day week.
I appreciate it, Greg. And like you said, the fundamentals are so important, as Bobby and Trey kind of explained, along with the Fed and how it impacts the markets and both the consumer as well. Also, we want to talk about technicals. So when you said the indices, one thing we like to track is the S&P 500.
Very much
We usually talk on a short term to intermediate term basis when we give support and resistance levels. So what I wanted to do today is to look long term. What's our long term support? So for the S&P 500, we're looking at a number at 3,690. We also are looking at a 200-day moving average. Right now, we're sitting around 3,391. While that may seem a little low, we have to factor in that does include a COVID environment. So we'll start to see that push up a little bit if the market can maintain itself. And that's also going to give us a good indication of how the momentum is going into the rest of the year. It's important to look at where we come from and where we're starting to go.
No, yeah, and we like to give these numbers to our clients. It's no guarantee, but it gives us an indication and helps us navigate all the variables we've talked about this morning, as well as how long is it going to take for the vaccinations to be delivered and for us to get back to a normal lifestyle, back to people really traveling and going out to eat and those kind of things, which will really help this economy. So on that note, as we go into our 16th year, we thank you so much. We're going to continue to keep you updated each and every day. We're going to deliver these vlogs, our research, high tech, high touch, as we call it. We want to interact with you, whether through technology, in person with social distancing, or however we can communicate best with you. Email, our social media, which you can also there find information about our upcoming event on February 17th. So, and we just thank you for believing in us and staying with us, sending emails, forwarding these vlogs to other individuals. We can't thank you enough for that. It has opened up doors for us here at Five Plan Partners, and we thank you for that. We hope you have a great President's Day. We hope that the rest of February is great for you, and we will keep you updated. Thanks for joining.